Hello, welcome to Applied Financial Accounting. In this tutorial, it will be something very different than traditional ones you have ever seen so far. Why is that? Because it's presented in a very practical way and easy language so that it's understood who I'm targeting for these tutorials. So those who are interested to become an accountant, they are in their initial stages, or small business owners or the managers who are interested to understand in easy language how how to read financial statements, or so that to make a better sense of it, so that they can use their knowledge to basically do a better job. So this is who I'm targeting. Another few facts about this is that this is kind of live, and I'm not doing any edits. I just record and then afterwards look at it once and then put it online. If I catch an error after it's online, I try to fix it. So just to some of the disclosures I should make. On today's video, we're going to talk about balance sheet, what balance sheet is, and how to make balance sheet. And if you recall, for those who already watched my last videos, and they are very important because I've done it like step by step. I used a case study and started with accounting equation, and using that particular case study, I did a follow-up video on an income statement, what income statement is, and how to make an income statement, and then owner's equity. So today we're going to do how to do balance sheet using the same case study. So before I move, I would like to invite you to pause on this and then to watch this or read this disclaimer. And this is shortly about me, and for those who are interested who this person is doing these tutorials. Alright, let's begin. What's a balance sheet? So balance sheet actually is a financial report, one of the 4 key financial reports, and it talks about all the assets, liabilities, and owner's equity at a specific date. So that means all the assets and what the company has, like cars, like cash equivalents, accounts receivable, and also basically what the company, what are the company's liabilities, who the company owes the money to, and who are the creditors. Basically, the balance sheet doesn't say who the creditors are, but the amount that the company owes, and then how much of the total assets the company actually, or the owners actually share. And the way the format of the balance sheet is done, it starts with assets, and then it's followed by liabilities, and then equity. So to make it simple to understand, let's look at the case study. Yes. So this is the format. I have done already some formulas. It's basic formulas and nothing substantive. I will also show you. And it starts with the name of the company, and then it actually should say followed to that what this report is for, and then the date. And so if you remember from the case study, the name of company is always right, never wrong corporation. And then balance sheet and the date September 30, 2025. So then it starts with a title of basically classification, and we start with assets. So under the assets we write cash, and then accounts receivable, supplies, equipment, and then total assets. Just as a reminder, this is a very basic balance sheet, and this is again for beginners, and it's just for an understanding. And as we move along, we will be doing also medium to intermediate to advanced balance sheets, for which will be a little bit complicated, but the principles stay the same. And then we then have another title, liabilities and owner's equity, and we start with liabilities as a big title, and under the liabilities we have accounts payable, how much we pay, and then we have another title, owner's equity, and followed to that owner's capital as a subtitle, and then this is total liabilities and owner's equity, sums up all the liabilities and owner's equity. Let's do practically how does it work. So if you recall, on account equations we did this on the other day, and I'm just basically collecting data from here and then putting it here. So what is important, that this line, which I'm going to put it in red, should equal this one. And let me do a basic formula. So this equals this. It should be equal. So if it's equal, it will say true. If it's not equal, it will say false. But you will also see that the numbers should be the same. So what I do is that I copy, you can either type it manually, but you can also use Excel formula. So the first one, if you see here, it's cash. So cash in accounting equation is here. So you basically take the sum of the cash. So you bring cash. So cash is 33,240, and followed to that we have accounts receivable, and accounts receivable is also from asset, and we've got, if you remember, we had four transactions on the case, and then the balance of accounts receivable is $20,000. And then followed to that we have supplies, and then we go to account equations, and then in the supplies column we only had one transaction. We just copy the balance, which is $2,200, and then followed to that we have equipment, and then on the equipment column we have one transactions, and then we just copy the balance, $6,800. So that gives us a total assets of $62,240. So now we start with liabilities and accounts equity. Just as a reminder, so if you remember when we did the case study, this should equal this side. So this is another format. It's more or less you need to understand and learn which one goes to which bucket. And yeah, so here accounts payable, and on the liability side we had a couple of at least three transactions. So we had $2,200 accounts payable, and then under owner's equity, owner's capital, if you remember, we did this video. Of course we did some other videos prior to that. It's related to how to do accounting. It's related to financial applied accounting, basically to help us understand it step by step to where we are today. But relevant to balance sheet, we did this accounting equation, and then followed to that we had income statement, and then after income statement we did owner's equity statement. If you remember, we did this and then we copy owner's capital from here, not from here. Okay, not from here, just to give you a hint so that you're not confused. So this is owner's equity. We copy that. Owner's equity is $60,040. So when we copy that, and then you can see that both sides of the equations are equal. So that's when we say assets, total asset equals total liabilities and owner's equity. With that, our presentation comes to an end. If I just summarize it, you basically look at the accounting equations and then you try to put all these numbers either manually or copy it in the right bucket. Yeah, and if you have any questions, feel free to leave it in the comment, or if you have any comment or feedback, feel free to do that. If you have any criticism, I'm open to that. I always believe that criticism is a good opportunity to improve. Thank you for watching and see you in the next video. Bye.